Hi everyone, in this video we will discuss on the last part of Chapter 1, Global and Emerging Market Banking Systems. International banking has expanded markedly over the last 30 years. Its form and geographical coverage reflect two important aspects of the role international banks play in the global economy. First, international banking has been an important component of a broader process of financial globalization, liberalization and integration. Second, the local operations of foreign banks have spurred the development of financial systems in emerging markets and helped to improve information problems via close and loyal customer relationship. There are three perspectives made towards the emergence of the international banking system. Perspective on the traditional and modern foreign banking. Perspective on the post-crises of international banking, and perspective on multinational banking. Under the perspective on the traditional and modern foreign banking, let's have a look at the comparison between the traditional and modern foreign banking. Traditional banking is more conservative, while modern foreign banking is more flexible and more liberal in terms of credit, loan, advance and asset valuation. Other than that, the traditional banking has been practiced in smaller banks as compared to the modern foreign banking. It has been practiced in the larger bank. Over the long term, traditional banking is the least risky due to its size and exposure as compared to modern foreign banking. In traditional banking system, customers can open any bank account, take the facility of saving, withdraw money, meet the bank manager and give feedback, and receive physical help for getting a loan from a bank. The main idea of this practice is they do not want to take the risk of customers' money, because customers' loss is their loss. They deduct fraud cases by monitoring the activities through CCTV. Meanwhile, in modern foreign banking, it is sometimes known as e-banking, home banking, internet banking or online bill. Modern banking is very convenient because people can use e-banking from home or anywhere for tracking money in their account without going to bank, ATM, kiosk or terminal. Modern banking can also protect environment by using e-banking. Now let's discuss the emergence of international banking in the perspective of post-crisis of international banking. A key lesson of the recent crisis is that deregulation, or a process of removing or reducing state regulations, has allowed banks' balance sheets to expand beyond the level that could be justified by sound risk assessment. The environment of low funding costs, short-sighted investment strategies, difficulties in measuring risk and a rise in banks' leverage have increased the vulnerability of the banking and financial system. The decrease in credit demand from the corporate sector and households has been a direct sign of financial crisis. The demand for trade credit, for instance, declined as a result of shrinking world exports and falling commodity prices. In 2009, weak merger and acquisition activity and balance sheet difficulties have acted as a supply-side constraint on international banking activity. In late 2007, the drying up securitization markets tightened up financing conditions, especially in those countries that rely heavily on mortgage securitization. Securitization is the process of taking an asset or group of assets that cannot easily be sold or exchanged for cash without substantial losses in value, through financial engineering, transforming them into a security. Mortgage securitization is a type of asset-backed security that is secured by a collection of mortgages. Examples of securities are bond, stock, debenture, evidence of indebtedness, and investment contract. In the perspective of multinational banking, a multinational corporation or transnational corporation, and multinational banks are the corporation or enterprise that manages production establishments or delivers services in at least two countries. For example, Citibank operates offices in more than 90 countries. International banking engages in cross-border operations. Example, a Bank of America giving loan to a bank in Poland is considered as international banking. The way the firm has arranged its lines of authority and communication, allocation of duties and responsibilities and the structure are based on the types of international banking offices. First is correspondent banking. Correspondent banking is an informal linkage when bank and different countries are set up when a bank maintains correspondent accounts with each other. This bank facilitates international payments and collection for customers. The word correspondent means mail or cable communications that help customers having business abroad. This type of international banking offices does not need to maintain any office and manpower and extension of business to customers. The second type of international banking office is resident representatives. Resident representatives provide their customers help from their own personnel on the spot in foreign countries. This type of international banking offices provide information about local business practice and conditions, for example, information on the creditworthiness of local customers. But they are not accepting deposits and loans. Their presence are small and appears as an ordinary office rather than a bank. The third type of international banking office is bank agencies. Bank agencies is like a full-fledged bank in every respect, except that it does not accept deposits. This type of international banking office deals in local money markets, foreign exchange markets, arrange loans, clear bank drafts and checks, and channel foreign funds into financial markets. Bank agencies concentrate on arranging long-term loans for customers. Next type of international banking office is foreign branches. Foreign branches are operating like the local banks except that the director and owners tend to reside elsewhere. A foreign bank is obligated to follow the regulations of both the home and host countries, and their banking books are incorporated with parent banks. Foreign branches may offer more loan than subsidiary, and provide fast clearance of checks. Foreign subsidiaries and affiliates are locally incorporated banks that happen to be either completely or partly by a foreign parent. Foreign subsidiaries do all types of banking business. Consortium banks are a joint venture of larger commercial banks. This international banking office is primarily concerned with investment, arrangement of loans and underwrite stock and bonds. Examples of consortium banks are JP Morgan and Standard Chartered Bank. Now we have completed Chapter 1. Please read the textbook for more detailed explanation. Thank you.